Don't judge each day by the harvest you reap, but by the seed that you plant. Welcome to JRC Bureau and the 15 Steps to Becoming a Successful Investor in Any Asset Class playlist. In episode 14, we are talking about dollar cost averaging. Trying to time the market waiting for the best time to buy or sell an investment is extremely difficult. Fortunately, there's a time-tested strategy that can help you buy more when prices are lower and less when prices are higher. It's called dollar cost averaging. Let's say you invest $100 every month. When the market is up, your $100 will buy fewer shares, but when the market is down, your money will buy more. Over time, this strategy could lower your average cost per share compared to what you would have paid if you'd bought all your shares at once when they were more expensive than the average. In effect, this strategy eliminates the effort required to attempt to time the market to buy at the best prices. Dollar cost averaging can lower the average amount you spend on investments. It also reinforces the practice of investing regularly to build wealth over time, and it takes emotion out of your investing and prevents you from potentially damaging your portfolio's returns. The investment strategy of dollar cost averaging can be used by any investor who wants to take advantage of its benefits, which include a potentially lower average cost, automatic investing over regular intervals of time, and a method that relieves them of the stress of having to make purchase decisions under pressure when the market is volatile. Dollar cost averaging may be especially useful to beginning investors who don't yet have the experience or expertise to judge the most opportune moments to buy. It can also be a reliable strategy for long-term investors who are committed to investing regularly but don't have the time or inclination to watch the market and time their orders. It's important to note that dollar cost averaging works well as a method of buying an investment over a specific period of time when the price fluctuates up and down. If the price rises continuously, those using dollar cost averaging end up buying fewer shares. If it declines continuously, they may continue buying when they should be on the sidelines. So, the strategy cannot protect investors against the risk of declining market prices. Like the outlook of many long-term investors, the strategy assumes that prices, though they may drop at times, will ultimately rise. Using this strategy to buy an individual stock, cryptocurrency or ETF without researching could prove detrimental. Investors who use a dollar cost averaging strategy will generally lower their cost basis in an investment over time. The lower cost basis will lead to less of a loss on investments that decline in price and generate greater gains on investments that increase in price. With regard to actually using the strategy, how often you use it may depend on your investment horizon, outlook on the market, and experience with investing. If your outlook is for a market in flux that will eventually rise, then you might try it. If a persistent bear market's at work, then it wouldn't be a smart strategy to use. If you're planning to use it for long-term investing and wonder what interval for buying makes sense, consider applying some of every paycheck to the regular purchases. If you are interested in getting bankrolled from $25,000 to $10 million to trade cryptocurrency or any other asset class, check out the links below. For the crypto purists, I have an exchange for you to trade from, as well as a state-of-the-art cold storage wallet that holds cryptocurrency, NFTs, DeFi assets, dApps and so much more. If you're looking to manage your portfolio from one place and keep track of your profit and loss at any point in time, then check out the CoinStats link. That's a wrap for today, my assassins. I'll try to keep this playlist short and painless. If you liked what you heard, please like and subscribe and take a long position on the notification bell. Remember, when you play the investment game, you either become rich or you spend the rest of your life measuring the cost of your ignorance.